Let's talk some Bitcoin. Jeff Pierce is here, Senior Manager of Derivatives Trading at Charles Schwab & Co. Jeff, good afternoon to you, sir. Let's talk some Bitcoin and those names that are so correlated to the asset itself. What I found most interesting, and maybe you have as well, is just how strong Bitcoin has been on its own. It hasn't needed the NASDAQ to drive the ship. Bitcoin's kind of been its own ship off to sea, going to apparently new heights.
Yeah, absolutely. Up another 5% today as we watch the stock just rebound really well from that crypto winter we saw in 2022. Still not reaching those 21 highs, but that's what investors are kind of looking for. I think the big question now is what happens next. There's some uncertainty, certainly around elections, could add volatility to a name like Bitcoin. Some of the things that we know investors are looking for, that the upcoming halving in April, which they're preparing for, the reward for Bitcoin is going to get cut in half, meaning miners are going to get about 50% fewer Bitcoins for verifying transactions. These halvings, they're scheduled to happen roughly every 4 years, every 210,000 blocks that are mined. We've seen these happen in the history. They've gone through 3 before. In the months following, we've seen Bitcoin rally. So that's a big question mark for investors right now: is are we going to see Bitcoin hit all new highs here? There's certainly some anticipation around it. It's possible some of those historical moves we've seen in Bitcoin in the past have been related to other events. Look at 2020 is a good example. We saw, the pandemic kind of coming out, a lot of stimulus money. But we also have companies like Riot saying there's some concern about this halving and some of the events that could happen from it. We know that the regulatory side of things, Bitcoin and some of the crypto names have really seen some relief as well. Recently, that mandatory survey with the EIA, where they were focusing on the electricity usage we see from these mining companies, that survey got paused. We know that Riot and Texas Blockchain Council have brought cases against the Department of Energy, which has really put some scrutiny on their case as well. And to your point, some of these names that you think of when you think Bitcoin, Marathon Digital, for example, up roughly 300% over the last 12 months. You look at Riot, up over 180%, Coin up 214%, all of which are up significantly today. So some big moves from these names.
I mean, big moves, Jeff, and these names, they trade. I mean, like, the volume is also always something that catches my radar because they're just making such large, the volume in all of these names. Marathon, I think, was the leader of at least these, Bitcoin exposed stocks. But as far as what's next, because I believe when looking at this crypto space, that you always need a next catalyst, because it was first we had the ETFs, now those have launched. Now, what is next in the Bitcoin space? And not asking you to be a market maker here, but I do feel like there has to be a near-term catalyst, or else things just sort of fizzle out, because this is such a momentum and interest-driven area of the market.
That's the big question, right? Post halving, what do we see? What do we see happen to Bitcoin? Do we see a big reaction to the upside, which was something we've seen historically? Are there things from a macro perspective that could also cause that upside reaction? Certainly, some volatility is expected out there, and these names are known for being volatile. If we look at the specific names, some of the things we're hearing out of the companies, they are seeing mining rates being fairly positive going into 2024. A lot of what we're hearing talk about is reducing some of their dependence. Some of the names reducing their pure dependence on Bitcoin, looking at some of the other cryptos as well, but mainly focusing on energy cost, focusing on trying to get their business models a little bit more efficient. We've heard that out of Marathon. We've heard that out of Riot. Riot, one of the largest mining facilities, they've been expanding their operations. We've seen that as well. And similar story out of Coin. Management is really focused on relying less on the unpredictable trading volume and fees, and more on the reoccurring revenue streams. Coinbase, they've been trying to diversify outside of Bitcoin. We've seen that quite a bit. And so far, their subscription service revenue, we've seen that start to show up in some of the numbers. So it'll really be how these companies are changing their business models a little bit, trying to drive more revenue, maybe not relying as much on some of the volatility that they're directly seeing from Bitcoin trading.
It does seem too, Jeff, that if you can time this market right, in the recent history, these names that are associated with Bitcoin, the Marathons, all the names that you talked through, those names, the Riot blockchains, have outperformed Bitcoin when Bitcoin's doing well, but they're also outperforming on the downside when Bitcoin's struggling. So it seems very similar to what you see in gold miners and gold itself, kind of similar to what you see in oil drillers and things like oil as well. So we'll see if that can continue. Investors wanting more return if they take the added risk of going for these miners. Appreciate it, Jeff Pierce, Senior Manager, Derivatives Trading at Charles Schwab & Co.